Let this feed over to the stream. Okay, I love it when a plan comes together, and it looks like we are live on YouTube, and it is straight up on the hour. Let me start the recording. Okay, good afternoon, everybody. This is Dennis Wilborn with the Active Trend Traders. I want to welcome you to today's session of How to Make Money Trading Stocks, and this is our weekly live video. And so if you're joining us live on Facebook, on YouTube, welcome aboard. Welcome to all the other folks who have logged in and also have joined us. We've got Steve Ferreira joining us here in Hawaii. He's got a great stock pick for you, and we're going to cover that here shortly. Want to remind everybody that, learn to focus on the process. The profits will follow. One of the biggest challenges oftentimes with folks when they're learning how to trade for a living is to, one, follow the rules, and then let the rules basically provide the protection they need. Your rules are like your insurance policy. They basically keep your losses minimized, and they control your risk. And at the same time, they also promote your profitability with the session. Want to remind everybody that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. And so what is our intention for today is how to make money trading stocks, options, and ETFs. Our objective is timely, actionable intel review at the end of each week, seeking to clarify, simplify, so that, one, wealth can be multiplied. That is basically my objective. So as we look at what's going on with the market this week, well, first let me say hi to Steve. Hi, Steve. How you doing? I'm going to unmute you.
Hello. Nice. Good to be here.
Doing great. Well, let me go through the market overview, and then you can give us feedback. What stock are you going to be looking at today?
Ross Stores, ROST.
ROST. All right. Well, I'll get that up, and we'll cover that here shortly. Thanks. Be back in a second. So, okay, stock and ETF performance. We'll be looking at that to see if we have any bonus steps. I really appreciate Steve checking in with us on a weekly basis. He is an aficionado of both the Wyckoff methods of trading, and also likes the IBD watch list. And so, yes, we do, Eric. We do have Ross stores here in Hawaii. We have several of them. And but anyway, Steve really likes. They are crap. Okay. Okay. Back to where I was. Steve has done a really great job of providing us a list of stocks that he looks at on a weekly basis. I know that he's constantly reviewing the market, looking for opportunities. And so just really quick, are we may be into the seasonality on NASDAQ to have it keep climbing. We'll take a look at that. And also on the seasonality for the Russell. It's time for it to be climbing. As we're sitting up this week, I'm up about 23%. Took a slight hit because of the jump in actually the jump in Tesla and the type of position we had on Tesla, but we're still up, with the exception of the NASDAQ, up better than the rest of the market. And then, of course, if you do basically subscribe to Active Trend Traders, even on the free membership, you do get access to our Power Ranked Elite watch list every weekend. This is one of them. It highlights, basically my power ranking, where I go through over 500 IBD stocks on a weekly basis to line them up in which one is showing the strongest or the greatest power going into the weekend. Some of our members utilize this watch list. They may only look at the top 3 or 4 or 5 stocks because they don't want to be overburdened. They then throw those into their regular longer watch list. and it basically helps them to keep refreshing their list. So let's take a look at what the heck the market is currently doing. Make sure. There we go. So I'm going to get rid of this line because that was from last week. Remove that. As we can see, looking on the chart on the left is the weekly chart. The chart on the right is the daily chart. Earlier in the week, it was looking very suspicious, like the market was going to roll over and sell off. However, as you can see, price action came down, bounced with the spiders off of the 8-day moving average. Now we are moving right back up into a level of resistance at the 302 level. This block of space here, let me get my drawing tools out here. Keep your eye on this block of space now between this upper level, about the 302 level, all the way up to the 305, gradually going on up. It's that expanding megaphone top. And now, thing to remember on this is the S&P can continue to beat its head against that top, and price action continue to, basically grind higher along that top. So just because it hits this top doesn't mean it's going to roll over and die. It does not mean that specifically. It just means that that is the level of resistance where we'd anticipate prices slowing down. Prices may slow down here on the S&P. However, we're not getting any warning. Well, we're not getting anything on the TSI, with the exception of we're up in the past high zone. We are getting a little bit of a negative divergence here on the TSI, oftentimes, and also a little bit of divergence here. But as you can see, we actually broke out of the divergence, which could be considered a positive strong side for the S&P. Rolling on over to the NASDAQ. NASDAQ continues to be the strongest of the entities that are out there. We are right back, look at it, it's right back at resistance. And with the candlestick on the daily chart being one that is basically, this is a nice strong candle. It respected, in this case, respected the 20-day moving average on the daily chart. Price action has moved, the TSI has ticked back up, made a new high. However, TSI did not. So we're still a little bit of negative divergence there. I think Steve basically said last week, that he was cautiously bullish, and he's, that is basically coming to fruition. This week, we basically gapped up on, well, that was from last week. We basically finished last week here with this kind of bearish looking candlestick. That low held, the 190.70 level held, and now has moved back up. So again, we can throw in if you want to throw in, and Steve can explain what this is from a Wyckoff perspective, but you've got a nice little sideways move here. And you can just throw that in there and say, hey, as long that is the new zone range of price movement on the Qs. What about the IWM? IWM, again, IWM not as powerful as the other stocks. However, it too has provided us a secondary breakout here on a weekly chart to the upside. Strong resistance up here at the 158.79 level, but everything is now in gear. Notice the price action now for the last 5 days, or actually a little bit longer than that, since the 17th, is now back above the 200-day moving average. And so that, that basically looks like something very positive for IWM. I'll be looking to, since everything is getting back in gear, I'll be looking for a pullback into the moving averages for a potential bounce higher, or failure for a move lower. The S&P, like I said, the Russell Still the weakest link, but if it busts out of this area here at the 158.92 area, its upside target is at the end of this extension here, which would put us up at 171.86. Anything you see in the index charts, Steve, that piques your interest? I got to take him off mute.
Perspective, the Wyckoff
Okay,
principle.
hold on, Steve.
Okay.
Now you need to answer the question. No, you were
Okay.
still on mute. So anything
Okay.
you see here in
Not too much more to add. I pretty much agree with what you said so far. What I would add is that from a Wyckoff perspective, the more we trade sideways, the longer we stay in consolidation, the stronger the move that will come, up or down.
Up or down, okay.
Yeah.
Do you have any kind of gauge on that, Steve? In other words, like if we trade sideways for 6 months, does that portray a stronger move? Or well, I mean, correct. I'm sure it would.
Say we go sideways 6 months versus about 2 months. The move out of the 6 month consolidation ought to be a lot stronger than the move out of the 2 months consolidation.
Okay,
the more time we spend sideways, really the more positive for the market in terms of its subsequent move.
Okay, so you would just consider. How do you know when it's consolidation, and how do you?
We fail to make new highs, and we're bouncing off the resistance levels you pointed out. Maybe we've just broken out in terms of, oh no, I'm looking at Sedge. But we as long as we keep bouncing off resistance to the downside and not making higher highs, not making lower lows, we're in consolidation.
Okay. So, but sometimes those sideways movements can also be sideways distribution ranges, yes?
Sure, it can be. And you really don't know what it is until the market breaks one way or the other.
Okay. So it's one of those things that after the fact.
That's correct, which is not that useful for trading from a trading perspective. But I think that the key is you're not trying to predict which way the market will break, but you're looking for the break and be ready to play it up to the upside or the downside, depending on what the market does.
I love it. So, hey, guys, see this nice green arrow right here? This was Steve's suggested stock from last week. Again, we don't make any recommendations, but this is one that he said he liked last week. I think you actually bought into it.
That's correct. That's correct. Yeah.
Right here, and I just want to show you, we're putting out good stuff here. Okay, it basically took off. Here was Friday. It took off. I think he bought it about $85 or so. And look at that, a nice little run up about 11% so far. But it's so respecting these moving averages on the upside.
Right.
Earnings coming up over here, but really dynamite pre-earnings run. So let's see what Ross.
Go
ahead.
Okay, go ahead. If you got it.
Yeah, did you have anything else on SE? Okay, let's go over to Ross. Okay. Oh. Whoa. Okay, I can't hear you, man. You're gonna need to. Anybody else having trouble hearing Steve? Steve, you're really garbled if you can hear me.
In August and in early October. And now we're pulling back, so I think it's a good place for an entry. Okay. And the entry for me, I entered today above yesterday's high. My entry was at 110.74. It's an actual trade.
Okay.
With a stop at 109.13. right under the yesterday's low for the stop and right above yesterday's high for the entry.
Okay, so if you're interested yeah, this is a dynamite little pullback. And just to, yeah, you were breaking up earlier, Steve.
Okay.
So,
okay.
yeah, if you kind of reiterate why,
sure.
yeah, you need to pull if you're talking into a mic, you need to speak right into the mic because that's where it's kind of dropping off. Dadgummit. Yeah, I'm not getting a lot. Can you guys hear me? Okay, yeah, I don't know why Steve isn't coming through. It's probably a bandwidth issue, but this looks like a really interesting buy right here. And again, with a stop just slightly below this, if you're an active trend trader, yeah, this is not, well, this is a trade bounce off the moving average, even though the TSI is not crossed up yet. And so, Steve, if you can hear me, I had to kind of like trying to, okay, thanks, Bruce. And so this looks really, really good. Again, you can either look at, when is earnings coming up on this? Earnings is coming up here on the 11/21. The normally it's got a little bit over almost $2 million shares per day worth of activity. And let me take a look at one other thing. Yeah, if you're a Ross person, yeah, it does not have weekly options, but again, with earnings coming up over here, 11/21. Yeah, that wouldn't fit to be able to do options, but it certainly would fit to buy some shares on that. And I would look at buying some shares if I hold above the 20, which is currently at 20-day moving average is currently at 110.41. With an upside target, of course, of probably up here about 118 or so. 118. One way you can do that is if we, yeah, Steve, you were breaking up really bad. I don't know why.
And same on your in terms of my hearing you. I don't know why either.
Okay.
Yeah, anyway, I think this stock has shown some very good relative strength. It held up very well in the correction during August.
Yeah.
And the minor correction in early October. So I think this pullback is a great place for an entry. I would enter at the market right now.
Okay.
Yeah.
That's, and that's so, okay. Yeah. We've got you. Yeah. It sounded like it may have been a bandwidth issue earlier.
Okay.
Are you coming through a hotspot or are you going through
a cable modem?
Okay.
Usually not an issue. Yeah.
Okay, so hey, this is it for the day. I really like this particular opportunity. Right, again, as Steve says, right where it's at, you've got it. And if you buy it right where it's at right now, you will have a downside potential. You go what, a dime on the other side of that?
5 to 10 cents.
Okay.
So about a 1.5% risk.
Yeah, 1.5% risk. That is not a bad risk. Actually, it's an excellent risk to be able to jump on this. It has taken out the swing eye there, and so be taking a look at that. If you are in for the final hour, we're going to be taking a look at that because, as I said, at Ross, because if it moves back up just even to the past highs. Snapshot here.
Oh, it'd be a great trade just to the prior high.
Yeah, because you'd be going back to about there. So that's about a 4 or 5% gain. And if it doubles that, then you're talking about 6-7%. Ross is one of those kind of names that when the market is kind of acting kind of wonky, it's a nice steady mover. It just nicely moves up. And so it's not a bad name to be in. So thanks, Steve. That works,
You're
man.
welcome. You're welcome. Thank you.
So I think you're going to do at least two in a row now. I mean, last week's pick was dynamite. This week's pick is looking pretty good too.
Well, we'll see.
Okay.
Market can do anything.
That it can do. Say, hey, let's wrap up today. So again, if you need a speaker for your group, I can do customized meetings anywhere in the world. Not necessarily in person, but I can do them live via a webinar. The Bay Area Moneymakers has its November meeting coming up on the 2nd of November. That's the first Saturday in November. And then premium members, of course, will be jumping into, we're doing now 2 live market trade rooms, one on Mondays, one on Fridays for premium members. We have some modifications coming to our membership going into the new year that we'll be announcing here probably latter part of November. Free webinar, working on that free webinar. I've been watching the markets and doing the market trading, all kind of stuff. I'm helping my wife launch a business of hers. So we're excited for Michelle. And then, so, hey, if you want to get in on just, joining the active trend traders, even for just the free access to the elite watch list every weekend, go to this website there and you can sign up. There's no obligation or anything, and you'll just get access to the updated watch list that I do on a weekly basis. And so that's what all I have for today. I want to thank Steve for joining us with his stock pick of the week. And so remember, 2019 is rapidly running out. So we want to focus and keep growing the egg, trade wisely, trade profitably. You can reach me at any of those things. And then again, if you're a premium member, we'll be doing the premium members final hour, starting at the top of the hour and go through the end of the day. So with no further ado, I will just basically say, aloha, trade well and prosper. Have a great weekend. Mahalo. God bless. Steve, thanks for joining us, friend.
You're welcome.
Okay. God bless everybody.